I want to remind you, this is 5 of 6 sessions where we're talking about how you leverage eXp as a model. If you remember where we started, we began talking about first certifications that are offered by eXp, how to build your tool belt to best help buyers and sellers. And these programs are all offered at no cost to the agent to be able to, like I said, expand your tool belt and publicize those certifications. Then we talked about some lead generation opportunities with eXp. Those typically do come with a cost, but there are several good ones, and we covered a number of them, not all of them, but a number of them in 2 of our weekly sessions. Last week, we talked about what it means to become an icon agent. We hear the word icon a lot, but didn't necessarily know exactly what that meant. And now we're going to round out the conversation talking about revenue share and agent attraction. This is probably in the same category as the icon agent for many of us coming over to eXp, learning the brokerage, learning the model from a production standpoint, but then really wanting to be able to start having conversations with other people. You know, how many times since you made the move has an agent said to you, why eXp? Or what made you move to eXp? Or what do you think of eXp? And, you know, sometimes because something is new and because there's so much to digest, we're not necessarily ready to articulate that. So what we're going to talk about today is first really understanding revenue share, because sometimes you won't get questions like that. Sometimes what you're going to get is, oh, eXp, I heard all they are is, you know, a pyramid scheme, right? Or, oh, eXp, all they do is try to recruit agents. You know, they're not producing agents. So the more you understand these platforms, you know, knowledge is power in my mind. So we're going to talk about what revenue share is, what it looks like, how it works. And then I think from there, that'll naturally lead into the conversation that we'll start today about how you can attract agents, how you have those conversations. And then we'll wrap it up next week and really dive even deeper into handling attraction opportunities, both from a positive and a negative standpoint, being ready to answer the questions, but also being ready to tactfully negate the naysayers, if you will. So let's talk about what revenue share is. If you refer back to your ICA, it very specifically defines that eXp Realty agents can receive revenue share income from the sales activity of the productive agents they sponsor into the company. There's 3 really important words in that definition: income, productive, and sponsor. So let's take a look at those one at a time, make sure that you understand what that definition is really referring to. Let's work in reverse. First, let's talk about what it means to sponsor an agent. Obviously, you've heard this word before because when you completed your own application to join eXp, you had to identify a sponsor. That would be the person that was most influential in your decision to come to eXp. On the opposite side of that, when someone comes in and completes their application and identifies you as that person, you are the sponsor, and that agent becomes what is called a frontline agent. That is a tier 1 agent to you. You're going to want to imagine yourself as sort of being the star on the Christmas tree, if you will. I'm a visual person, so hopefully that helps you. And then from there, the tiers of your downline will go in order 1, 2, 3, and so forth. And anybody that you directly sponsor in, anybody who's naming you on their joint application, is going to be a frontline agent. You can take that to another level and call that person a frontline qualifying agent if they have certain production. And that's where this is going to become important in another minute or two. So bear with me. And if you don't understand or want clarification, just say so. If you sponsor someone in, they're automatically a frontline agent. To be a frontline qualifying agent, they either have to close 2 sale transactions in the course of 6 months or achieve $5,000 in gross commission income. in the last 6 months. Okay, so the ability of an FLA to become an FLQA is continually monitored by eXp. So every month when revenue share is evaluated and calculated, there could be agents that become eligible as qualifying, and then there could be agents that drop off as qualifying, okay? But in either case, whether you're a frontline agent or a qualifying agent, that is a tier 1 agent in your downline. Let's see, we have a question. Go ahead, Milagros. Did you want to go ahead and ask your question? Just unmute.
Yes, thank you. So with the qualifying, does that mean if they're just an FLA that we're not, and let's say they have their first transaction after 6 months, that we won't be able to, if you will, leverage or capitalize on revenue sharing from them because they're not under the qualifying? Is that how that works?
So what'll happen is every month, your revenue share and your frontline qualifying agents will be evaluated. So once someone meets that production criteria and they move into the qualifying category, then any production that they secure will then become eligible for you for revenue share payout. But let's say, they close that transaction, then they come into your revenue share. They're reflected in their calculation, but then let's say 9 months goes by and they don't close any new transactions in the next 9 months. Then at some point, once they've had a 6-month stretch with no qualifying transactions, they no longer meet that production requirement. And so they slide back to an FLA as opposed to an FLQA. But as soon as they close another transaction again, they could once again meet that production criteria and go back and forth. Does that make sense?
Yes, it does. Thank you very much.
Okay, great. Sure. You also, in addition to the tier 1 agents that would either be frontline or frontline qualifying, as those agents sponsor people in, you will fill in the branches of your Christmas tree, if you will. And those agents will come into your downline on lower level tiers. Tier 2, Tier 3, Tier 23. The important thing to understand from a revenue share standpoint is that revenue share is looking to capture the first 7 tiers of your downline. Okay, so anything beyond Tier 7 doesn't roll up into this program. Okay, so that's sponsorship as it relates to revenue share. Now let's talk about production as it relates to revenue share. One important misconception of this program is that agents believe that the money that funds the program comes from agent commission dollars, agent net commission dollars. And that's not true. It's important that you understand, especially if you're sort of being handed those negative comments that I mentioned, that eXp has said we collect company dollar. So you have a cap. Whether you're on a $4,000, an $8,000, or a $16,000 cap, that is considered company dollar. That 4 or 8 or 16,000 goes into eXp. Doesn't go to your local team, doesn't go to any other agent. That goes into eXp. And what eXp has said is we strive to take about 50% of that company dollar and allocate it to revenue share. So eXp is directly allocating their own income back to the agents. Okay, that's really important to understand, that you getting paid revenue share doesn't mean that the agent that you sponsored is getting paid any less in order to pay you. They're going to pay that cap into eXp whether you participate in revenue share or not. So that's the production piece. The last piece, the other definition that I said was important, the word income. We've talked about ways that you can produce income as an eXp agent, the obvious with production. Then we talked a lot about stock awards, about Icon as having opportunities. But what you want to understand about revenue share is a cash payment, and it's calculated and distributed on a monthly basis. So this is yet another opportunity for you to expand wealth and to generate a path for some passive income. Okay, does that make sense so far? Because we're going to start looking at some numbers. So before everybody's eyes sort of glaze over a little bit. Okay, this is where some people find it gets a little bit complicated. I'm going to share this chart with you, and you'll find this chart in a number of places. You'll see a version of it in your ICA. You can find it in the eXp Explorer Guide. There are a number of eXp publicly distributed resources that reference this chart. And I want to try to explain it to you in the most basic terms so that you can turn around and put it into practice and just sort of understand it. So you have, as I mentioned, the tiers. We talked about how revenue share stops after tier 7. Okay, so that's why you don't see any tiers below this. That doesn't mean that you won't have agents over time as your downline grows beyond that, but for your revenue share calculation, cuts off at 7. You're going to see 2 percentage columns here. You have expansion share and you have exponential share. These percentages are going to make a lot more sense in a minute once we talk about some actual examples of what revenue share might look like. The important thing to know is that these percentages are applied to what's called your adjusted gross commission income. Adjusted relates back to a concept where I told you in the beginning that eXp has vowed to give about 50% of that company dollar back to the agents in the form of revenue share. But there is a formula in place in order to ensure that they don't exceed the 50%. Obviously, they need that other 50% to be able to pay their overhead costs, staffing, technology and development, and so forth, okay? So they have a formula in place for identifying and calculating adjusted gross commission income. And this definition that I stuck here at the bottom of the slide comes directly from the ICA. Adjusted gross commission income is GCI adjusted by a factor, and that factor is sort of backed into to make sure that they don't exceed the 50%. Okay. I'll be frank and tell you that there's not a whole lot of detail or information about how that formula is calculated. But I will tell you that the message has consistently been eXp looks to achieve that 50%. They want those dollars going back to the agents to incentivize them to help grow this brokerage. Okay. Now, depending on where you are in your own growth and in your downline growth, you may be eligible for expansion share or, in addition, exponential share. Okay. And the way that that's determined is by how many frontline qualifying agents you have. So you can bring in, let me say, for example, you went and stood on a street corner and you got 100 agents to come and join eXp, but none of them produced any business. None of them closed any transactions or earned any income. So none of them are going to count as a frontline qualifying agent. Okay. So what we want to make sure that you understand is that when you think about how revenue share can be valuable to you, you want to be able to bring in productive agents that are closing transactions. When they close transactions, they're paying into their eXp cap, which means you have an opportunity to earn revenue share. Okay. The way that this chart works is that let's take a look at tier 1. If you have 0 to 4 frontline qualifying agents, you will get this 3.5% exponential share on any of those first line agents that have production that close transactions. Okay. And I'm going to show you the math in a minute. But the only way on tier 2 that you get this larger exponential percentage is if you have at least 5 or up to 9 frontline qualifying agents. If you don't have the 5 or more, then you would get the 0.2% for any tier 2 agent. Okay, so let's take a look at this in practice. And I want to emphasize when we look at this example and the other examples that follow is that I'm sharing this with you as an example. You can't take these numbers literally only because I don't have the ability, nor do you, to compute adjusted gross commission income. Only eXp can do that, okay? But here's the same chart that I just carried over from the prior screen, just so that you have the numbers. So remember, let's just concentrate on tier 1 and tier 2. I'm not even trying to make this very complicated or extensive. Let's say in your first year that you have yourself, you're an eXp agent, and you've gone ahead and sponsored one person, Jane. And let's say that in that same year, Jane sponsors one person, that's Judy, okay? Jane is going to be considered a T1, a tier 1 agent. Judy is going to be considered a tier 2 agent, okay, because she's coming in below Jane. Let's say that both of these agents join eXp on the team. Maybe the team that you're on are a different team, but let's say that they come in on a team and they qualify for the $4,000 cap. If they meet their full cap, so if they pay their full, let's say that their adjusted gross commission income is $20,000 and they pay their full cap into eXp, then here's how the revenue share percentages would be applied. It would be 3.5% on Jane's commission income, and it would be 0.2% on Judy. That's because in this scenario, you have one frontline qualifying agent. That's Jane. So you are falling into this category here of 0 to 4. So when you get to a tier 2 person, you're going to get the 0.2%, not the combination of the full 4%, because we don't have the 5 frontline qualifying agents needed. So what this scenario tells you is that there could be the potential, based on these numbers, just as a suggestion, that you could earn $740 for this year in revenue share. Okay, does that make sense? Are there any questions on that? Again, just to help you conceptualize the math, but you can't assume that these are absolute figures. Go ahead, Milagros, jump in.
So just want to make sure I understood. They have to reach cap first before it even unlocks it?
They do not have to reach cap.
Okay.
As long as they are hitting those production requirements that I talked about before. So they have to have 2 qualifying sales or $5,000 in gross commission income. So let's say in this scenario that Jane only paid $2,000 of her $4,000 cap, and maybe her adjusted gross commission income was $10,000. Assuming she qualifies as a frontline qualifying agent, then instead of you getting 3.5% of $20,000, you would get 3.5% of $10,000. So the trigger is absolutely cap dollars being paid by the sponsored agent. Okay.
Thank you.
In my scenario, in the next couple that I'm going to show you, I'm going to go on the assumption that everybody that we're sponsoring in is reaching their cap. But if that doesn't happen, then that will obviously then adjust your opportunity for revenue share down. Okay. Okay, so let's take a look. Let's say, all right, that was the first year. We sponsored in Jane. Jane sponsored in Judy. Now let's see, maybe we grow a little bit. Maybe over the next couple of years, in addition to Jane, maybe now I add Joe, John, and Jennifer. Sort of slow and steady, right? And let's say that with each of these 3 that I sponsor, I bring Joe and John into eXp. They come in on a team. So they're going to be capping at 4,000. And then maybe Jennifer wanted to come in as a solo agent. And so she's looking at a cap of 16,000. Okay. Let's also say that while I've been sort of slow and steady sponsoring a couple of agents in, that Jane, who I sponsored previously, has had some success, and she brought in Jeff. So before we even get to these other layers, let's take a look here. On my level 1, I still have Jane as a tier 1, but now I've added 3 more with Joe, John, and Jennifer. They are also all tier 1. In addition to Judy on tier 2, because Jane has now also sponsored Jeff, Jeff is going to also be a tier 2 on my downline. In addition to Jane's activity, Joe has been able to sponsor someone, John has been able to sponsor someone, and so has Jennifer. So here are each of the individuals that they've sponsored: Jean, Jocelyn, and Jim. They too are coming in as tier 2 agents, okay? They are coming in below a tier 1, which automatically puts them at tier 2. Let's say that most of these additional agents are also coming in at a $4,000 cap, maybe coming in on a mega icon team. And then maybe when Jennifer sponsors Jim, maybe Jim is another solo agent, or maybe he perhaps wants to achieve icon status, which you can only do when you are a full $16,000 cap agent, okay? So let's continue with the assumption that each of these agents with their cap achieves payment of the full cap, which means that anybody on a $4,000 cap would have to achieve $20,000 in gross commission income. A $16,000 capper would have to achieve $80,000 in gross commission income in order to satisfy their full cap requirement. Again, I disclose, we're going to assume for our exercise here that this number in this column reflects the adjusted gross commission income computed by eXp. In this case, we have 1, 2, 3, 4 tier 1 qualifying agents, okay, 4 FLQAs. So we're still in this 0 to 4 category. That means that anybody on level 1 is going to get 3.5%, and anybody on level 2, I'm still going to get the 0.2% of their adjusted gross commission income, okay? So that's how that would look in year 3. So maybe if I go back to year 1, okay, $700, maybe a car payment, maybe a new laptop, right, to build my business. Maybe I bought some new signs that I was desperately wanting or needing. Maybe I bought some open house flags, right? Certainly things that you can do with $740 that you otherwise wouldn't have. Now look how it grows as we're talking about sort of modestly expanding. I didn't want this to be an exercise of how do you go out and secure a 50-person brokerage. This is about just organic conversation over the course of your production business, getting to know agents and other brokerages and helping them see the value of this model. Okay, so now we're starting to see maybe a little bit of traction here. $5,000, maybe that's a week at the shore. Maybe that's the down payment on a new car to get you back and forth to all these buyer showings or open houses or whatever the case may be. But you're starting to see something grow, okay? So now let's take it even a little bit further. Let's take it out to the 5th year. So we're still in the same. We have Jane. We added Joe, John, and Jennifer. Now let's say we managed to add in those last couple of years a husband and wife team, Judd and Jill. Okay, they're going to come in as a team, as a domestic team on my tier 1, and they come in as a unit when they're husband and wife or domestic partners in this way. We still have Jane, who sponsored Judy and Jeff. We still have Joe with his 1 sponsor. John, let's say John picked up another sponsor. In addition to Jocelyn, he now has Jack, and Jennifer still has Jim. So going from year 3 to year 5, we didn't do a ton of growth, right? But we did manage to add a couple of people. So now let's take a look at where we are with tier 1. The addition of Judd and Jill, again, remember, they're going to be treated as 1 unit because they are 1 domestic team with 1 cap. They have now put us into the 2nd category of the 5 to 9 frontline qualifying agents, okay? So now that's going to change how our revenue share calculates a little bit differently. All of our first lines will get that 3.5%, which is here, the exponential share. Now, anybody on tier 2 who manages to meet those production requirements, we will be eligible to get paid the 4%, which is the 0.2 plus the 3.8. So now look at how this changes. from where we were modestly projecting ourselves at year 3 to where we're looking after year 5. Now we're really talking about, in my opinion, things that could certainly impact your business. This is a $1,000 a month plus marketing budget. This is an annual vacation for your family. This is, a retirement plan where you are an independent contractor with no pension or 401k available to you. Now you have opportunity to think ahead and project what you need to be able to retire from selling real estate. Okay. Does anybody have any questions on how I sort of progressed this? Or do you have any feedback or thoughts on whether you think it's reasonable or unreasonable, logical or not? Okay, good. Let's see. Oh, very good. Thanks, Milagros. Okay, so, and the important thing I want to remind everybody is that when we are talking about these opportunities for revenue share, remember that all of these agents that we're listing, so if we go back and look at this scenario, Jane and Joe and John and all of these agents are going to pay this cap to eXp on their production. Regardless of whether revenue share existed or not, they would be paying into cap. Your ability to get some of those cap dollars does not in any way negatively affect any of these agents. That's really important to understand, because people that are outside of this model, who are outside of this brokerage, oftentimes will want to suggest that that's how it works, or they worry that that's how it works. And that's just not the case. This is funded by company dollar revenue. It's also worth mentioning, because you'll hear this too, I'm sure, revenue share is not profit sharing. You'll notice that when we talked about these examples, as we went through them over the last few minutes, at no point did I discuss the expenses having to be offset with the company dollar that eXp is contributing to revenue share. eXp has set up front that they will take 50% of the company dollar and set it aside for this program. They didn't say, well, let's make sure we pay these salaries before we contribute any leftovers into the program. That's different from profit sharing, okay? What the company is doing is saying, I'm allocating these revenue dollars up front, and then I'll take the remaining revenue dollars and I'll be responsible for managing my expenses with those dollars alone, okay? So in terms of revenue share, that's sort of an idea of how it works, trying to dispel some of the misconceptions that exist about it. If you want to learn more, where I really encourage you to start, and I'm going to show you where you would go, is you want to take a look at your ICA. I would say many or most of us spend time reading the ICA itself, but I'm not sure how many actually went back and read some of the addendums, especially in the beginning. You want to make sure that you understand from a production standpoint what your obligations to eXp are and what their obligations are to you. But now that you've gotten your roots, you want to go back and really read this addendum B of your ICA, which really outlines the revenue share program pretty not conclusively, but pretty comprehensively. Okay. The other thing that you can do is always be on the lookout for information in Workplace. Anytime that there are significant announcements that are made with regard to either agent attraction or revenue share, they're typically always placed with greatest importance in the news feed. So I encourage you to make sure that you're staying up on Workplace, even if you just go in there once a day for 5 minutes, just to be up on the most current information about eXp, and you're picking up any of those high-level headlines that would impact your knowledge and understanding of this program. The other thing that I can share with you is actually a publicly published resource that you can, if you want to, I'm going to copy the bookmark, but here's the actual website. It's exprealty.com/income. This is a document that if you were having a conversation with another agent and wanted to be able to share some of the aspects of eXp that are appealing from a revenue standpoint, this is a really good place to send them. So I'm going to go ahead and you can also share this in PDF form. But I'm going to go ahead and put this in the chat so that if you'd like, you can bookmark it for yourself. Okay? So this is how you learn more about revenue share. Now that we understand revenue share, I hope that it's at least gotten you thinking about, okay, maybe I'm not so closed-minded to the idea of expanding my business through agent attraction, that maybe there could be an opportunity over time to build a downline and start to benefit from building relationships with other productive agents, okay? And not at the expense of those other agents, that they get to come into this brokerage and experience the same benefits and value that you're experiencing. And then they get to turn around and do the same thing and leverage the agent attraction program as well. So I encourage you, if you haven't, like I said, embrace the opportunity. Recognize that this could be a source of cash income, not stock income, not stock award income, but cash income that could really have an impact, whether it be on your professional life or your personal life. That's your decision to make. The other couple of things that I just want to emphasize with attraction is this could be a way for you to build an exit strategy, that at some point you may want to pivot from production into just attraction. And I also want to mention that revenue share is willable. So here's the thing. Let's say that you, maybe you spend a lot of your time in the next 10 or 20 years concentrating on agent attraction, and you are able to build up your revenue share to the point that you no longer need to produce real estate. You can continue to receive and enjoy your monthly revenue share disbursement so long as you remain an active agent who is in good standing with eXp. Okay. So again, there are many agents, particularly agents who have been with eXp for several years, that are enjoying 5- and 6-figure a month revenue share payouts that have done that are focused entirely on attraction and not so much production. Sure, go ahead, Milagros.
So just to reconfirm, at that point, years later down the line, you're saying that we're not actually making the possibility of producing our own income. Like, I'm not out with buyers and sellers and closing, but I still am eligible because I built this downline.
That's right.
Oh, wow.
That's exactly right.
Wow. Nice.
And the important thing is just to make sure is that you would still have the obligation to maintain your real estate license. Revenue share is essentially considered like a commission payment. So you can't receive a commission payment if you're not a licensed agent in good standing. So that same logic would apply here. But as long as you are active with eXp, then yes, you absolutely continue to receive the benefit of revenue share to the extent that the agents that come in your downline in your levels 1 through 7 are productive, are closing deals, and are paying cap dollars into eXp. The other thing that's really important to know is that you can will your revenue share to someone. If you select someone who is not an eXp, or excuse me, who is not a licensed real estate agent, then that individual will have 1 year from the time that the revenue share is granted to secure their real estate license, position their license with eXp to be able to receive that benefit, the continuation of that benefit. So even going beyond you just saying, let me fund my retirement, or let me look ahead to maybe wanting to pivot from production to attraction, let me even look beyond that at what this could potentially mean to my beneficiaries, to my spouse or partner, to my children, who might want to be able to go ahead and secure their real estate license to continue receiving the benefit of what you have built here and now. Okay? So what I want to make sure that we understand as we start this conversation about let's get into attraction, how do you start having those conversations? Oh, go ahead, Milagros.
I'm a question person. I just want to make
appreciate
sure,
it.
I want to make sure because this aspect I did not hear about it. So I want to make sure I'm completely understanding, because this gives me joy to my heart if I'm understanding. I have my baby boy, and so, he's 2 now and thinking about the future and everything like that. Are you stating that, let's say, and you may hear him, let's say he, he's not working in real estate, he has his own business or something like that. As long as he, I pass away, I will all this to him, and he gets his license, even if he's not producing, again, the same thing, he is attached to my downline simply by being in right standing with eXp, signing on with them, and having his real estate license?
Yes.
This is amazing.
So
Thank you.
Of course. So what I want to do is, again, I'm going to direct you right back to your ICA, because this was signed by you and it was signed by eXp at the time of your joining. If you go to that addendum B, you'll find a section here, incapacitation or death of an eXp agent. This paragraph here specifically addresses the opportunity that exists to will your revenue share to someone else. Okay. It, of course, as you would expect, it does disclose in the ICA that eXp is not required to approve that substitution, that they're looking for someone who is absolutely, number 1, licensed, and number 2, is in good standing. Okay. But here you have it right in your ICA in black and white, that is absolutely a possibility.
Okay? Thank you. I think I read it and didn't fully understand. And, so I just requested my ICA again. I'm to look at that. That's beautiful.
Good.
Thank you.
Good. You're welcome. That's why I think now is a good time to go back and understand so many of these platforms and leverage so many of these programs that we've been talking about these past few weeks, because when you're in the middle of the transition, you're just transitioning, right? You're trying to get your production to not miss a beat, trying to get your license moved over, make sure all those listings and all those contracts come with you. But now is the time to really dig in and say, okay, if I know I'm going to be in real estate for 10 or 20 more years, how do I, where I was a year ago, the brokerage that I was with a year ago, the minute I stopped producing, I stopped earning. And what you really want to make sure you're clear on is that is not the end all be all with eXp or with this model. Okay. All right. So let's talk about, how do I get going with agent attraction? We're going to talk about that. What I want to make sure that we address, though, it's really important, because it's important to eXp from a corporate standpoint and from a compliance standpoint. We know a lot about production compliance, making sure that you're crossing all your T's, dotting all your I's with contracts, with documents, with buyers and sellers. But there are also compliance requirements that exist with agent attraction as well. And I'm going to go ahead and copy this document. It's an agent attraction pledge. I'm going to copy it into the chat so that you can download it and take a look at it. It's, it's kind of, a contract, if you will, or to the exact name of it, it's a pledge where you're acknowledging that there are certain honor requirements, if you will, about how you go about attracting agents. That you can't go and step on someone else's toes if they are having those conversations with agents. That you have to be respectful of the model collectively, that you can't make payments to agents to try and attract them into the model, for example. Let me just make sure that dropped into the chat. No. So it's good to just know, not only from your standpoint in how you approach attraction, but if you were to have issues with other agents at eXp, how they too are expected to conduct themselves when it comes to attraction. That's really important. I find a lot of value in that, because I can tell you where I came from, that wasn't always the experience. And sometimes it, without mentioning any names, might have felt a little bit like a free-for-all. And I think what eXp really strives to do is make sure that doesn't happen. Do people break the rules? I'm not going to tell you that they don't. But the point is that, there is sort of documentation and definition in place that eXp will lean on to be able to provide that guiding principle. So I'm going to include that pledge that you can download. And then I'm also going to include a success strategy document that eXp provides as well. They're both really good. And the success strategy just sort of leverages the same principles of the pledge, but talks about, what are the best practices from an attraction standpoint. So let's go back here to, we talked about the pledge. I encourage everybody, if you are not part of our live presentation today and you want to be able to access the pledge, you can always go to the Explore guide. And I'll give, that is going to be, I just want to remind everybody, because this is a great resource. It's explore.exprealty.com. You can always go to the Explore guide on the internet, scroll down to Agent Attraction, and you can find the resources contained here that I'm sharing through the chat today. Okay. So once you understand sort of the playing field, what the rules of the game are, then understand from my standpoint, what I encourage is organic attraction, that you're not going to jump into this trying to go and secure a 50-person brokerage, that so much of how this begins is about that one-on-one conversation, somebody approaching you and saying, why eXp? Or why'd you make the move? Or what do you think? Or what is this eXp, right? How do you handle that question in the moment? So many people have said that to me, like, what am I supposed to say to answer that question? That's what I'm going to help you do. The most important thing, arm yourself with knowledge. Having knowledge gives you the power and the confidence. And then also leveraging relationships. I think if you think of all the people that you have worked with just in the last maybe 12 or 24 months alone, you've already established a relationship with those agents based on some transaction or, client that either you or they were working with, some property. So you already have a basis of connection with that person. So between having knowledge of the model and then leveraging relationships, the knowledge plus the added comfort level, you're not cold calling, you're not talking to a stranger. This is what's going to help you build confident conversations. So where do I get the knowledge? Well, this is just, sort of my list, and my list changes every day. I am always adding to it when I learn about something new. But these are some of the biggest things that stick out in my mind about this brokerage. And you can agree with any of these. Maybe some of these aren't on your radar, or maybe just seeing them here makes you say, hey, yeah, that is something that I think is way better than what you would see with most brokerages in our space, in the real estate space. If you've participated in the Tuesday masterminds, for example, I think collaboration is going to be a big one at the top of your list. You're not going to find that at every other brokerage. We just talked about, using revenue share as an exit strategy, a retirement strategy, or even a, how can I best help my future and secure my family's future strategy. There's icon status. There's the growth of the company. We just hit 75,000 agents this week. So these are so many of the things, so many of the talking points that the more comfortable you are with what these points are, the more sort of on the ball you can be having that conversation when that question is posed. So at this point, yeah, here it comes. I'm kind of known for this. There's a kindergarten teacher in here somewhere. I'm telling you, she missed her calling, but she likes to give homework. So what I encourage you to do, and what I'm going to ask if you are watching this in video form, before you go on to the second part, where we talk about how those conversations can be had, this is what I want you to do from your own experience to best arm you for these conversations is for you, identify the 5 attributes of eXp that either energize or excite you. It could be production related. It could be agent healthcare. Maybe that for many people, that is a life-changing benefit, going from either no healthcare or incredibly expensive healthcare to one that's affordable with good coverage. That can be very impactful, right? So for you, in your experience, identify 5 attributes, at least 3, but I stretch you to 5 because I don't think you'll have trouble finding 5. And then come up with a list of at least 10 agents that you've worked with. And it doesn't have to be agents that you've had to deal with. Maybe it's an agent that you've met at a networking event. Maybe it's an agent that you saw at a community event. Maybe it's somebody else that was in the brokerage that you came from, that you're thinking of their personal circumstance, to Malagras's point, thinking about her son. And maybe you're saying, gosh, if they only understood that this is available to them, how would they love this model the way that I do? How would they embrace this model the way that I do? So identify 10 people that you think might benefit from this type of conversation. And so at this point, that's where we're going to kind of stop for this week. And then when we come back next week, we're going to pick up with, all right, now you've got your attributes and you've got your agents. How do you start those conversations?